Hey there, Brian Vantoff here with REMAX Advantage Plus, Ramsey Trusted, and the Minnesota Real Estate Team. Here we are, the third Thursday of April 2025. It is Holy Week with Good Friday tomorrow and Easter, obviously, on Sunday. I hope you get a chance to spend some time with family or friends, just celebrating the reason for this week and understanding the gifts that we've been given. Let's get to the weekly market update. Let's talk about the week that was on my custom related search for that 50-mile radius around Minneapolis in Minnesota of previously owned homes. For the week, we saw 1,131 new listings hit the market this past week. That's 68 more than the prior week and 92 more than the same time last year. This increase in numbers, it is a little surprising to me considering that it is Holy Week, that it is the week of Easter. A lot of people are heading out of town, spending time with family. The increase in inventory does shock me a little bit that people didn't necessarily wait until next week to list their homes, but it is what it is, and here we are. Of the new listings, 343 did sell in the first week. That's over 30%. That's a pretty significant number considering where mortgage rates are. So we are seeing the market moving fairly quickly. 754 of the new listings were single family. That's up 12 for the week. 229 were townhomes. That's up 30 for the week. And 148 were condos. That's up 26 for the week. Condos and townhouse listings, that to me is an interesting number from the standpoint of those are pretty significant improvements in the number of new listings for those categories for the past week. And what I see those is as you're starting to see some of those townhome and condo sellers who are going to be move up buyers into a different type of home. So you're seeing those sellers getting their houses on the market now so that they can be ready to go this spring when their move up house becomes available. We're going to be seeing this domino effect of the kind of lower priced homes hitting the market, townhouses, condos for those people who want to kind of maybe upsize into something else. That's another part of what during the spring market is just a kind of a ramp up of listings at that lower price point to leverage into that next price point, and then that next price point leveraging into the next price point, and so on and so forth. That was interesting to me on the townhome and condo increase in inventory. This is the busiest time of year. We have 308 coming soon listings out there right now. That's down 121 from last week. Easter being a big factor, I believe, in the reason for the decrease in the coming soon listings. There is a total of 3,905 previously owned homes on the market. That is up 164 from last week and 536 more than this same week last year. Of the total available, 2,182 are single-family homes. That's up 101 at a median listing price of $530,000. That is up $5,000 from last week. 762 are townhomes. That's up 30 from last week at a median price of $319,000, which is down $1,000. 961 are condos. That's up 33 at a median listing price of $215,000. That is unchanged. 808 homes went from active to pending, down 30, and 663 went from pending to sold. That is up 210. The mortgage rates dropped by just over 0.25% from last week Thursday, with a good mortgage broker kind of being right around that 6.75% fixed 30-year mortgage conventional right now. Our rates are roughly the same as they were 30 days ago. They're about 0.1% lower than 3 months ago, 0.25% higher than 6 months ago, and about 0.25% lower than 1 year ago. We really continue to see a trend, a very narrow interest rate trend range, in my opinion. There was an article, front page of the Star Tribune here this morning that I quick glanced at. I don't subscribe to the Star Tribune, so I didn't read the entire article. But really the headline, as always, is always designed for shock and awe, and fairly misleading when it comes to, I think, really what's going on in the market. It talks about the wide-ranging volatility in the interest rates that happened because of the tariffs 2 weeks ago. And that's overly dramatic and ridiculous, in my opinion. What we saw a range on mortgage rates that went from anywhere from 6.5% to 7% from April 3rd to April 11th. A 0.5% range. That's not wild. It's not crazy. Overly dramatic in what that news is. And quite honestly, even since April 11th, our market has dramatically stabilized with very little movement in rates. What's really interesting is that 0.5% wide-ranging move on a $400,000 mortgage. amounts to a difference between 6.5% and 7%, only about $133 a month. So not an incredibly wide-ranging volatility when it comes to your monthly payment. When it comes to mortgage rates, quite honestly, your bigger impacts on an annual basis will be property tax changes and insurance changes. A 0.5% difference in mortgage rates from top to bottom is going to have less of an impact, in my opinion, on you than maybe what the insurance rates and the property taxes are going to be in coming year. This 0.5% difference between 6.5% and 7%, nothing in comparison to the difference between those homeowners at 3% right now and having to get a 6.75% interest rate right now. That's an over $900 a month swing compared to where people were 3-4 years ago getting 3% mortgages to today's 6.75. So that's much more dramatic than a 0.5% range that happened over 1 week time that the news media tends to blow out of proportion. In my opinion, shocker that the news media would blow something out of proportion. So that's it for the interest rates talk for the week. Realtors scheduled just short of 17,000 showings over the past week. That is close to the same as the week before. Last year for the week, showings were slightly higher, but really not by very much, maybe a couple hundred. I'm seeing this year looking a lot like things were in the real estate market last year. It's going to look a lot like 2024. That's where we are from a mortgage rate perspective. Prices are up a little bit. Inventory is up a little bit, but that does not mean that it is going to be a buyer's market when it comes to what's happening here. Just because of the fact that inventory levels are climbing, it's still a seller's market, at least especially through this first half of 2025. So that's it on the weekly stats. Now let's get into Stats Week. It's Stats Week. I can relay to you some of the information and stats as provided by the St. Paul Area Association of Realtors for the first quarter of 2025 and some monthly numbers as well. We can talk about that 13 county Twin Cities region that they provide stats on. For the first quarter, we saw a total of 14,639 new listings. That is up 5.3% from last year and up 25% from the first quarter of 2023. Closed sales this year are down for the quarter by 1.3%. It's not a big difference. And again, this goes back to why I believe we're looking to be very similar to where we were last year. Total closed sales for the quarter were 7,985. From 2023, our closed sales are up 4.8%. Median sales prices through the first quarter were $380,000, which is 5.4% higher than last year and 8.6% higher than in 2023. Over the last 2 years, we have increased our median home sale prices by almost 9%. And if you look at the previously owned single family portion of those values have actually gone up even more than that. Price per square foot this year is at $209, while 2024 was at $205. In 2023 was at $198. If we look at just March numbers, we saw an increase in new listings from the prior to 5,993 from 5,345. So up about 650 listings after a February where we saw fewer listings in February this year than we did last year. Pending sales in March were up 5.5% over last March, but closed sales for March was down 1.1%, which is reflective of the fact that we had fewer listings and everything else going on in February of this year. When it comes to median sale prices, the month of June is generally our peak month as larger, more expensive homes start to sell in, really start to get the most competitive offers in May, in late April and into May. And that's when we see our peak in median home price sales. They're good throughout the summer, but we do see more expensive homes go on the market right around and after Easter, and the highest demand through the month of May. July, August, and September, they're close runner-ups to what's going on in June. However, closed sales in June have that typically higher median price than any other month of the year, and those are purchase agreements that have been entered into generally in late April or into May. But again, summer is still busy all the way really through mid to late July. It does certainly start to taper off as we get into later July. And after that, median home sale prices really start to drop pretty significantly. Peak times for sellers to get the highest offers compared to their original list price is May and June, when sellers typically get 100% or more of their original list price. After June, those numbers start to go down 99%, 98.5%. If you're really stuck on trying to get, if you list a house at 400,000 and you want 400,000 or 500,000 or whatever the number might be that your list price is, generally you get those numbers where you don't have to maybe negotiate quite as hard to get your original list price as we start to head in over the next 45 to 60 days here. This is why it's so important to prepare in advance, because you have to know when it's right to sell a house. What type of house you got to take into factors like the type of house that you have, the price, the value of the home that you have. And so that really creates, okay, here's when we need to be preparing to sell that home. Housing affordability levels dropped in March from the prior March to a level of 118 from 121. That means that the typical household income makes 118% of what it would take to qualify to purchase a median priced home in the Twin Cities, which is roughly $380,000 right now. We are still sitting in a reasonably good spot from an affordability standpoint. Housing supply is staying relatively tight with just 2 months worth of homes on the market, which is still historically low. We've had periods where they have been a little bit lower in the past 2 years, but the lowest was in April 2023 at 1.7 months. At the end of March, we had a total of 7,632 homes for sale, including previously owned homes and new construction. Of that total, 40.6% were previously owned single family, 13.8% were previously owned townhomes, 13.6% were previously owned condos, 21.4% were new construction single family homes, 6.3% were new construction townhomes, and 0.4% were new construction condos. Previously owned single family homes remain the most competitive with just 1.3 months worth of inventory on the market. Previously owned townhomes are at 1.8 months worth of inventory, but all others are at 4 months or longer on new construction single family, new construction townhomes, new construction condos, condos in general for previously owned homes. So if you're looking to be a buyer and you are looking at buying a single family home or townhome, the previously owned market is still the most competitive market out there. That's what I got for you this week. I really appreciate you checking out this weekly video. I am here to answer any questions for you, be your real estate resource, provide whatever I can to help make your real estate goals a success as we head into the second quarter, as we continue to plod along into the beginning part of the second quarter already of 2025. I hope you have a great Easter weekend, and we'll talk to you soon.